if gold were a little soft. It's had a pretty good run, and stair steps to heaven almost never occur. The macro factors you talked about are all true, and they're all bullish for gold. If you look back over the last 100 years, the most important determinant of the gold price has simply been, pardon me, faith or lack of faith in the maintenance of purchasing power in savings instruments denominated in fiat currency, but particularly in the US dollar. Lucian, if you dial yourself back to 1970, I realize you can't do that because you weren't born yet, but if I dial myself back to 1970, coming into 1970, the US had 20 years of real economic hegemony around the world. Uh, but we became, as Americans, hubris ridden. The consequence of that is that we were spending more than we were saving. Sounds familiar, I know.
Yeah.
In the decade of the 70s, the purchasing power of the United States dollar, according to the Office of Management and Budget, fell by 75% over 10 years. Not coincidentally, the gold price ran 30-fold. Past is, I believe, prologue. The on-balance sheet liabilities of the US government exceed $36 trillion. The net present value of off-balance sheet liabilities exceeds $100 trillion. The only way to honor these obligations, I believe, is to reduce the purchasing power of the US dollar. The last time we did it, uh, the purchasing power of the dollar fell by 75% in the 10 years, and the gold price went up 30-fold. I'm not suggesting to you that the gold price is going to go up 30-fold, but Lucian, I need to say, it wouldn't surprise me at all over the next 5 or 10 years if the gold price went up threefold or fourfold. So yes, I'm a gold bull. Maybe not in the 1 week or 1 month time frame, certainly in the 3 year, 4 year, and 10 year time frame. And one more thing, Lucian, people always say to me, Rick, when do you think the gold price is going to move? Well, I think it's going to move in the year 2000. In the 25 years since 2000, the gold price has been up almost 9% compounded a year. It's gone from $250 an ounce to $2,900 an ounce. Gold has absolutely done its job. It's outcompeted the S&P 500. Pick an index. Gold has already moved, and I think it'll keep on moving. I hope I'm clear about that. If you if you give me the use of the word possible, yes. Eric has always been more aggressive than I, which is why he's wealthier than I. Um, Here's what I've learned, Lucian. I've learned that precious metals bull markets are kicked off by gold. The narrative has to be established by gold. When the generalist investor is attracted to the momentum in gold, he or she, some point in time in the move, defaults to silver, and silver moves further and it moves faster than gold. But the narrative needs to be established by gold, and I'm not certain that the narrative is established enough that we're seeing the generalist investor come down into the space. When that happens, Lucian, you won't need to ask either Eric or myself. It will be obvious to you. I've lived through one major market in silver and two fairly small markets in silver. And when they're happening, nobody has to ask. uh, this is a commodity on steroids when it moves. Everybody wants to know when. Sadly, I won't venture a guess. My default might be to Eric, but he's always more aggressive than I. I will be aggressively adding to my position. Now, it's worth noting that I did add pretty aggressively to my position 8 or 10 weeks ago, and I'm down fairly substantially from there. The uranium juniors, the basket of high quality uranium juniors, is down by 50%. And that's certainly attractive to me. And there's a real mismatch between the structural uranium price, which is represented in the term market, and the nominal uranium price, which is in the spot market. To the extent that some producers who have locked in term contracts are fulfilling those contracts in the spot market, enjoying the arbitrage, and not having to produce the pounds. What's more important is that not one speculator in 1,000 understands the importance of the term market and the ability to lock in prices and volumes over 15 or 20 years, which is to say, putting a floor underneath net present value. Uh, most people's sophistication with uranium is simply, when is it going to go up? This is a perfect circumstance for me.
Agree.
People who absolutely positively loved uranium and couldn't get enough a year and a half ago when the price was higher hate it now. And there's nothing I like to see more than hate. Will it turn around in a week or 2 weeks or a month or 6 months? I have no earthly idea. But a basket, a well-chosen basket of, say, 10 of the highest quality uranium juniors, I suspect will be a 5-year triple from here. I've learned not to think short term. The truth is that we're using substantially more copper than we're producing, and the amount of copper that we produce is going to fall. We, for 30 years, have underinvested in copper exploration and copper development. At the same time, the cost to produce copper, particularly the social costs, off concession investment requirements, government royalties, government taxes, government carried interests, and the costs of regulation are going up. If, and I don't know that we will, if we have a global recession, supply can fall and demand can fall and prices don't rise. If we don't have a global recession in the next 5 years, the copper price will be not merely higher, but much higher than it is today. Structural uses for copper are growing fast at the same time that production is falling. The new electrical economy, which everybody talks about, electric vehicles are fresh on everybody's mind. What's more important, Lucian, is the fact that 1 billion people on Earth have no access to primary electricity. In the next 20 years, they're going to get it. And that takes lots of copper. Copper in generation, copper in transmission, and once you get the electricity to the house, copper in utilization. So I'm attracted to copper. I'm attracted to copper stocks too, because copper mines are often very big mines, and very big mines can make you very big money. There are probably a couple dozen copper mines in the world right now that cash flow in excess of $1 million per day, per day. Um, and these are often multi-decade long mines. These are the mines that over 5 or 6 years can literally change somebody's lifestyle. I have Newmont as a 5, midway between 1 and 10. That outlook has been improved because Newmont, after their merger with Newcrest, embarked on a campaign of selling off their second-tier mines. Their target for the amount of money that they would raise in the process was $2 billion, and so far they've taken in $4 billion. The $4 billion is useful because it shores up the balance sheet. It's also useful because it frees up management's time and attention to focus on their tier one high quality mines rather than a bunch of second tier mines. I have Newmont as a 5. If Newmont can deliver on budget in terms of all-in sustaining costs next quarter without the share price going up too much, I will raise that ranking to a 4. It is all about them meeting guidance next quarter. Going from strength to strength. Franco-Nevada, you will remember, got knocked by 40% last year with the nationalization of the Cobre Panama copper mine. Uh, First of all, Cobre Panama was 15% of Franco-Nevada's net asset value, and the nationalization caused the share price to decline by 40. This is simply stupid math. The rest of the portfolio is performing fairly well, and I would expect either compensation or more likely a restart of Cobre Panama. I have Franco-Nevada as a 4. I would have it as a 3. It's simply that the stock has started to perform. And until we have reality around Cobre Panama, one can't reassign a higher ranking. I'm attracted to Skeena. I have it as a 4. Your challenge there, I think, is a finalization of the financial arrangement with the Tall Ten people. And the very important discussion around the penalties that Skeena will face because they're shipping high quality concentrate, but concentrate that they get penalties for because of the arsenopyrite. Once we understand what the penalties will be in the concentrate shipment, we'll be able to do a much better job of doing net present value calculations around Skeena. Agnico, pardon me, Agnico Eagle, I still have as a 4, despite a truly spectacular price run up in the last 12 months. I have it as a 4 because they consistently beat on all-in sustaining costs, and they have what I believe is the best growth profile among the majors. It's worth noting that that is now the most expensive, or at least the highest market cap gold stock in the world. They have delivered and delivered and delivered. Their presentation at last year's Boca Raton conference, I think, was one of the high points of the conference. They let you know how you actually run a real gold company. Alamos I have as a 5. They've delivered a lot of good news. My only problem with Alamos is their ability to continue to deliver at the rate that they've delivered over the last 2 years. McCloskey has been a friend of mine for 40 years, and I certainly root him on. He's done an absolutely spectacular job, and the growth could come from retooling Mulatos, the original asset. That's a very large gold deposit that they've paid a little less attention on as they've expanded into Canada. Coming back home and retooling Mulatos may deliver the growth that shareholders have enjoyed over the last 2 years.
Yeah. Do you own Seabridge Gold?
I do not any longer own Seabridge Gold. It gave me everything I wanted. Seabridge is an optionality play. They control well over 100 million ounces of gold in the Golden Triangle in northern BC. They have great relationships with the host First Nations, the Tahltan. I'm aware of this personally. They've done a very good job in terms of pre-works. The only thing I have against it is the high market cap and the high front-end capital costs. You could be surprised at any moment in time if a major decided that they wanted to add 150 million recoverable ounces to the book. They could do it in one fell swoop by taking over Seabridge, and that's Seabridge's game. But no, in answer to your question, I don't own it.